Here's a question that will change how you think about money forever. Are you a shipbuilder or a sailor? Most people investing today are sailors. They watch the market winds. They adjust their sails constantly. They pray for favorable weather and panic when storms hit. But every wealthy person I've studied thinks like a shipbuilder instead. Let me tell you what I mean. A sailor's success depends on forces outside their control. Wind direction, weather patterns, ocean currents. They're reactive, always responding to conditions they can't change. A shipbuilder focuses entirely on what they can control: the quality of their materials, the strength of their design, the craftsmanship of their work. They build something that can handle any storm. Here's the thing about investment philosophy that no one talks about. Your entire approach to building wealth comes down to this single choice. Do you want to be a sailor, constantly reacting to market conditions? Or do you want to be a shipbuilder, focused on what you actually control? Let me share a story that illustrates exactly what I mean. In 1988, Warren Buffett bought $1.3 billion worth of Coca-Cola stock. The stock market had crashed the year before. Everyone was scared. Financial experts called Coke overpriced. They said Buffett was making a huge mistake. The stock price dropped 30% right after he bought it. Critics laughed. The financial press wrote articles about how the great Warren Buffett had finally lost his touch. But here's what Buffett was doing that nobody understood. He wasn't trying to time the market. He wasn't predicting what Coke's stock would do next month or next year. He was thinking like a shipbuilder. He looked at Coke and saw something no sailor could see: a company that sold an addictive product to billions of people worldwide, a brand so strong that it literally changed human behavior, rising profit margins every single year, a distribution network that reached every corner of the planet. While everyone else was focused on stock charts and market predictions, Buffett was evaluating the fundamental strength of the business itself. Today, that $1.3 billion investment is worth over $25 billion. But here's the key insight. Buffett didn't get rich because he predicted the stock market. He got rich because he built a portfolio like a ship, strong enough to weather any storm. The sailor approach to investing is what most people do without realizing it. They buy stocks because they're going up. They sell when they're going down. They chase hot sectors and avoid cold ones. They react to news, earnings reports, and expert predictions. But think about this for a second. If you're constantly reacting to market conditions, who's really in control of your financial future? The answer is everyone except you. Here's a surprising piece of research that proves this point. Dalbar's annual study of investor behavior found that over the past 30 years, the average stock investor earned just 3.6% per year. During that exact same period, the S&P 500 returned 10.5% per year. How is that possible? How do people investing in stocks earn less than the stocks themselves? Because they're thinking like sailors instead of shipbuilders. They buy high when markets feel safe. They sell low when markets feel scary. They jump from strategy to strategy, chasing whatever worked last year. They let their emotions and external conditions drive every decision. Now let me tell you about someone who thought like a shipbuilder from day one. In 1965, a 22-year-old named Phil Knight borrowed $50 from his father and started selling running shoes out of the trunk of his car. This was Phil's shipbuilding moment. He wasn't trying to time the athletic footwear market. He wasn't analyzing competitor stock prices or following industry trends. Instead, he focused on something he could completely control: building the best possible product, creating genuine relationships with athletes, solving real problems that runners faced every day. For years, Nike barely broke even. Phil worked as an accountant during the day and sold shoes at night. Critics said the running boom would never last. Established companies like Adidas laughed at this small upstart from Oregon, but Phil kept building his ship: better materials, better designs, better partnerships with athletes. He focused entirely on factors within his control. By 1980, Nike went public and Phil Knight became one of the richest people in America. Today, Nike is worth over $200 billion. The beautiful thing about Phil's story isn't that he got rich. It's how he got rich. He built something that could succeed regardless of market conditions. This is the fundamental difference between wealth building and wealth gambling. When you think like a sailor, you're gambling on factors you can't control. Market timing, economic cycles, political events, interest rate changes, stock price movements. When you think like a shipbuilder, you focus on factors you can control completely. How much you save every month, what types of assets you own, how long you hold them, how much you learn about investing, whether you panic during downturns or see them as opportunities. Here's the reframe that changes everything. The stock market isn't a casino where you place bets on price movements. It's a marketplace where you can buy ownership stakes in the world's most profitable businesses. When you buy Apple stock, you're not betting that the price will go up tomorrow. You're becoming a partial owner of a company that sells billions of devices to customers who love their products. When you buy Microsoft stock, you're not gambling on chart patterns. You're acquiring a piece of a business that provides essential software to millions of companies worldwide. This shift in thinking changes your entire relationship with investing. Sailors worry about daily price movements because they're trying to predict the unpredictable. Shipbuilders ignore daily price movements because they're focused on long-term business fundamentals. Sailors feel stressed during market crashes because their strategy depends on things going smoothly. Shipbuilders feel excited during market crashes because they can buy great businesses at discount prices. Sailors constantly question their decisions because they're always reacting to new information. Shipbuilders stick to their plan because they know that building wealth takes time. Here's what this looks like in practice. A sailor sees Amazon stock drop 20% and panics. They wonder if they should sell before it drops more. They check the financial news for explanations. They consider switching to whatever sector is performing better this month. A shipbuilder sees Amazon stock drop 20% and asks different questions. Is Amazon still the dominant force in e-commerce? Are they still innovating in cloud computing? Are they still generating massive cash flows? If the answers are yes, they might actually buy more shares at the lower price. Same event. Completely different responses. Because they're playing completely different games. The sailor is trying to predict and react. The shipbuilder is trying to own and wait. Which approach do you think creates more wealth over time? Here's the truth about investment philosophy that most people never learn. Your returns aren't determined by your ability to predict the future. They're determined by your ability to stay focused on what you can control. You can't control market crashes, but you can control whether you panic during them. You can't control interest rates, but you can control how much of your income you invest every month. You can't control which stocks will be hot next year, but you can control whether you own pieces of great businesses for decades. You can't control economic cycles, but you can control whether you think like a shipbuilder or a sailor. The most powerful investment philosophy in the world fits in a single sentence. Focus entirely on what you can control, ignore everything else, and let time do the heavy lifting. Every wealthy person I've studied follows some version of this approach. They build their financial ship with high-quality materials, strong businesses, consistent savings, long-term thinking, emotional discipline. Then they let time and compound interest do what time and compound interest do best. Build the ship that can weather any storm, and you'll never need to worry about the weather again. This is the difference between getting rich and staying broke, between building wealth and gambling with money, between thinking like an owner and thinking like a renter. Stop trying to sail your way to wealth. Start building your ship instead.